welcome back to F.A.C.E, Henrik.
Thanks. Thank you, Dale.
Okay, you're a little low. Can you bring up the volume a little bit, buddy?
Oh, yeah. Can you hear me now?
Better, yes.
Better. Okay, I'll speak up loud then.
Okay, so there is a screen share. It's on the drop-down menu. Have you used Zoom before?
Yes, I have.
Yeah, who hasn't since the pandemic? And I don't know about you, Henrik, but I'm trading this pandemic a little better than the last one.
Oh, you did? It's good. Good to hear.
All right. Nice, well, my trading warrior brother, welcome back to F.A.C.E.
Thank you.
It's been a while. And, you know, you always bring a nice PowerPoint presentation. I'd like to acknowledge that your, economic winter and deflationary narrative was spot on in energy. I don't even think at the time you were looking for -38.
No, I wasn't.
We've had a blow off to the upside in the bonds where, yields went to historic lows. That was part of it. And how have you felt over the last year or so about, I know when I have a bias, I'm always looking for reasons technically to put on the trade, and when I'm the wrong way in the trend, sometimes I could make money if I manage it right, counter trend, but overall it's difficult. Why don't you tell us how you've been, because the whole FinTwit universe knows your view on gold. What's it been like for you to have watched us rally $500-600 and not, first of all, the opportunity cost of not being long for a move like that, but probably trying to top pick it along the way up?
Yep, that's fair question.
Okay.
Well, it's been tiresome, I would have to say. It has been interesting to see that we did see an extension of this sideways movement. It's most visible if we go to oil, and actually, if we look for all 2019, actually we go back to 2018. I did see the top, and that we're going to go much lower. I didn't. Sorry, I need some water here. Got some.
Okay. We have all the time you need.
Thanks. So it was in 2018 that I saw that we were going to go a lot lower in oil due to the structures that I see in Elliott waves. Did I see 2019 become a long, tiresome walk sideways? No, I did not. But still, that doesn't change the structure, and that didn't change the fact that we were going to below 20, which I saw in 2018. Right. And actually later I said on FinTwit, I've been saying below 10, and we surely got there.
And I saw that.
Yeah, and at the same time, we'll have to ask ourselves, so what happened then? Because was that really the end of it, or was something more coming? And everybody seems to think, well, that was it. We are all done, and it's that was the deflationary part. My charts tell us that we are not done, and we're not done with the deflationary part. I'm actually going to see. I see that we're going to see a much bigger bust in inflation levels, and hence we're going to go through a severe deflation. And I know everybody was saying again that we have the Fed all in and gone nuclear and all this, but they have done this before and still not been able to go up against the tornado of a deflation. So I think my chart at least tells me we are going to go lower.
Okay, so is it possible last time the Fed embarked on this in the Great Recession, they really held the whole thing together for 11, 12 years. This time it's been more massive, but since we are in an economic winter, is it possible that this time maybe the Fed bought us 2 years with what they've done?
That's a good question. That is definitely a good question, and that could be. I mean, there's nothing, and especially with having seen 2019, which was a long, still in a downturn, but a long sideways move. Could we then see, this same thing? That is something we could consider. I think there are signs which are showing us that it could come much before that, and there is an end to everything. And if we look at it if we look to some of the models that I can present here, I think that the deflationary bust will be within the next 6 months. But
Okay.
Can I be wrong? Yes, I can, of course. But
Okay.
but if maybe I can dive into it.
Go ahead, buddy.
All
I
right.
appreciate you fielding the questions. And look, I know how it can be on Twitter and some of these other sites. And you know what? Everybody's wrong one time or another.
Yeah.
Forecasts work, and forecasts. I thought it was going to rain, and the sun came out today. So
Exactly. Yeah.
it's how
But
you manage it.
I'm not. Yeah, exactly. And I was long with the goal you're referring to from the 1350, 60 to until 1500. So I mean, I got my small share. But anyway, but if we're looking at it from a macroeconomic point of view, I mean, I see this.
That's a great shot, Henrik. Because I was just saying, this is like the invisible depression because people didn't have cars in the 30s.
No, and I think it's going to become much more visible. I think we are in the early stages, and I think that we had a shot across the above with the what we saw here earlier this year, but it's definitely not the end of it. That goes. Okay, let's go on. So what I see still is that the contractive winter, which I still, this is where I get the understanding of where to position myself. Are we out of the winter? Well, no, I don't think we are. I think there are still some, events that we're going to see coming. And we're going to see, for instance, the pension fund crisis. We're going to see the run from paper money to gold. We're not seeing that yet. Despite me being wrong on gold for some time, I haven't given up on my target. It is still we're not there where the real run, the run from fiat currencies is kicking in. And one thing we have definitely not seen, and that's the debt at record low levels by the end of the winter. So we are not at the end of the winter yet. And then we have war, which I hope we'll never see, of course. So I think we're going to see a replay of a lot of the things that we saw in 2008, 2009. And then we're going to see some new ones coming, because that actually shows us how desperate the different central banks have become in trying to solve this in a monetary way. But that goes that's because they miss the big picture, as I see it. And the big picture is that debt is the reason why we are in the winter. Debt is the reason why we cannot see growth. Debt is the reason why we have deflationary pressure all over the place. And they are trying to handle that with monetary stimulus, but even monetary stimulus will at some point come to will get challenged, even in a world where we have debt. So
by who, Henrik? Are there bomb vigilantes still out there in hiding that will be resurrected?
Well, I think we could see inflation bottom at a point where we do not want it to see it it bottoming. Meaning that we're going to see a stagflationary period. We're not there yet, and I think we're going to see one more bust in the deflationary period. But just to come to my point here on this slide is that by the end of contractive winter, we will have to see that the debt has been brought down to a record low level, to a low level. What we have seen since 2008 and 2009 is that it's been going up ever since. So have they solved it magically this time around by bringing a lot debt into the system, by printing money, which actually by the end of the day brings more deflationary pressure as it brings up, it builds debt? I don't think so. I think we are going to go the full cycle, and we might see bounces and jumps, here and there on the way, but we are going to go full cycle. So, and also, if we look at the economy, it is plummeting. I mean, I know there's a financial market, but if you look to the real market, to the real economy, that's where it unfortunately hurts right now all over the place. So we have auto sales, which is a good leading indicator, plummeting and really fast. We have the Chicago Fed National Activity Index, which fell 22.3 standard deviations. I mean, this is out of this world. And
how do you explain the disconnect between the real economy and the equity market to people?
Money printing.
Okay. That's what I
And
thought. All right.
and money printing, of course, is that going to rule and going to be the one standing by the end of the day as the victor? I don't think so. I think we're going to go full cycle deflationary wise, and then also stagflationary wise.
Okay.
I think I look at makes it, it consists of eight. I'm breaking up.
Now you're better.
Okay, better now.
Yeah.
Okay. So what I see is that with an index like this falling 22 standard deviations, of course, it's something that's going to not just last for a few weeks and months, and then we're going to see the Fed, magically going to be able to transform and change the whole direction of the economy. The economy is a super tanker, and it's going down right now. And at this point, is actually Titanic as I see it. So. If we look to copper, as the way I look at it, I think we have a long way down. And copper, to me, is an indicator of the real economy. It's an indicator of where we're going in terms of employment and GDP. And for the way I look at it, we have been bouncing since March, but it's only a bounce. And into in my Elliott Wave world, we're going much lower. We're going below
82?
the level of. Yeah, 82, something like that, back to 2003 levels.
I'm so old I could remember prices down there.
Okay.
50 cent, 60 cent copper if you look left. Anyway.
Yeah.
Okay, go ahead, buddy.
But that is the indicator of the real economy. So, bounces along the way, yes, sure, but I think actually the next decline is going to get much tougher, and that's going to be.
Dr. Copper contracted COVID.
Well, yes, we can say that. I think actually COVID was the trigger, not the reason for.
Right.
I think the bubble was there. The bubble was there to burst at some point, but COVID was the one that made it burst. So
yeah.
And okay, sorry.
Go ahead.
No, and then of course unemployment. I think it's going to take years before we come back down. I just want to put this in. I mean, when we have something like the unemployment jumping up to above 15 at this point, this is not something that's going to be solved by money printing. If that was so simple, Weimar Republic and Zimbabwe would probably have had better faith.
Good point.
So I think it is. There is a disconnect between the financial market and the real economy, and this is what we see, of course, in equities. So here we have the S&P futures. I think we are close on some kind of top here. I know that the mark count to suggest that there could be a top in here. The Elliott Wave definitely tells us that we could have an A and a B and a C, which will take us down to, if A and C are equal length, down to the level from 2016, which is the bottom of wave 4. That is that's my main scenario. If we break above 3150 area and with strength, again, we could see the disconnect come, entirely and supreme, and by seeing all-time highs. But that would only talk to the severity of the next deflationary bust, because a complete disconnect forever and ever in the real economy and the financial market is not going to be. It's going to last for some time, but not forever. So we are going to come down at some point in a deflationary manner, and then we're going to see stagflation at a later point. Is it going to work with this kind of timing I put in here? Probably not, but we're going to see both deflation and stagflation before we are by the end of quadratic winter.
Okay.
And then, so yeah, stock hikes and in extreme bubble. I'm just taking some very good tweets here from Andrea Costa on Twitter and say, looking at the Schiller PE ratio, which is showing extreme bubble. We have Sven Heinrich here pointing to the 143 market cap to GDP. So I'm not worried one bit to say, well, we are in a bubble scenario. We are in a disconnect between the financial and the real economy. And if we look at at what we have ahead, this is from Andrea Steno and on Twitter also. If we look at the U.S. Velocity of money, and this is really the key of a driver of inflation, that is how fast is money circulating, and how does that then impact on the CPI? And if you look at it here, it seems like we could see a major drop in CPI, which would go hand in hand with what I expect in deflation ahead. So I think we are going to see. So if I look to some of the to commodities, this is a very similar pattern to what we had in oil. back in 2019, 18, that we see a descending kind of triangle, and we're going to see another leg lower to a secular bottom coming later this year or maybe next year. So we are not out of the deflationary, and we can show other charts like that. We have also with corn. I mean, that small bounce in 2020, should that be the bottom? I don't think so. I think we're going with also with the Fibonacci.
$1.80, $1.50.
Go lower there. So.
Okay. Interesting that you like agriculturals, because my old expression, you can't eat gold.
Yeah, but that I will bring that up a little later. But it is about it shows us something about are we inflating the world, or are we deflating the world in the world right now? So I'm seeing deflation, and also my favorite inflation gauge, the Aussie dollar, suggests what I see is a very strong deflationary phase. This bounce that we see from March again, which we see in everything from copper and everywhere we look.
The market's completely binary. They've all recovered, just a difference of magnitude.
Yeah, and so what I see it as a bounce. It's not the bottom. It is the.
Where would you say you're wrong in Aussie, that it's more than a bounce? Closing above that channel? How much tolerance above the channel?
Yeah, well, I could see another pattern playing out as well. But that would be in the world that you were talking about earlier. So if they bought us another 2 years or so.
Okay.
Yeah, then we could see another pattern. But that, again, we have to bring all the charts in alignment, and this one is cannot stand alone.
Okay.
Euro dollar, I can hear about the excitement about this the small bounce we have seen in euro. I'm not too positive about it. I think it's just what we can see here is another test of this area. And in fact, if we, I think I have another short-term chart here. If I look at this, what we since March, in my world, there's no doubt this is a correctional pattern all in yellow, and that means that all correctional patterns will be reversed and you'll surpassed. So the bottom back in March will easily be surpassed. So this is correctional pattern, and we actually just today got into the area where we have the first strong leg A equals C, meaning we could turn here, or we could turn a little higher. But but the strong coming decline could be quite strong. I might just jump to my euro chart here for a sec, my longer term, and to me, there's no doubt about it. This major pattern we have in euro is not complete.
Yeah, but it could go 114. Is that why you're showing the B up there?
Yeah, I think 113, 14, yes, something around here. We could go somewhere around. It's more than when we zoom in here. So I could see it go higher, but it's not. Again, euro strength would suggest that the world was all clear. So the dollar is not going to be the wrecking ball anymore, and we can get back to growth, and emerging markets will be all fine. Right. I don't think we are there, because that's not what we see when we see the deflationary indicators.
Okay.
So, and then we're coming to some of the precious metals. We have. I like to make this pointer to all the gold people, to the gold bulls. Well, if gold bottomed in 2015 and silver then bottomed in 2020, I mean, was it like normally we would see silver leading gold, and this just seemed that silver was 5 years late this time. I don't think that's what we're seeing. I think what we're seeing is, again, what we talked about, the sideways movement, and we have not seen silver nowhere near the top of what we had in 2011. So in Elliott wave terms, this is something that needs to finalize lower, and the kind of move that we see in the short-term time frame here is simply a double zigzag, which is going to bring us down in a very strong leg down lower in a C wave of this Y and then the big C.
Sub 10.
Around bottom 2008, yes.
Yeah. I mean, price-wise, sub $10.
Sub $10, yeah. That, yeah, and I meant yes, from the time back then. And then we have gold, of course. So again, this was the kind of, if I can just go back to silver here, this was the kind of movement that I was expecting in gold when we talked the last time, Dale. Yeah. So silver and gold normally follows, along. And this world here, it went lower, and now it's been bouncing up, but it'll come lower as I see it. But
yeah, because the ratio went to gold silver ratio went to what, 120, 126,
yeah,
and recently pulled back to 95.
And if we look to silver, and we look to all inflation indicators, and we look to miners, and we look to everything, the one and only that stands out is gold. So either gold is wrong, or the rest of them are wrong, or it has simply just disconnected. I don't believe in the disconnect. You will not see a disconnect between silver and gold. So I think it's about the kind of structure that we have in gold, which was not the triangle that I suggested last time, but it's just another one. And that is also why we have not seen, if it was the case that gold was going to, extremes, and we know that the Fed is already in with, everything. Why haven't we seen all-time highs yet? And why are we seeing this kind on the weekly of very strong divergence, 10 months worth of divergence on RSI, stronger even on 5 months, and this kind of wedge which we are breaking out from. So I'm sticking to the point that no, it was not the triangle that I talked about last time. This is a double zigzag, but that's just another Elliott wave pattern. But that doesn't tell us that we're going to all-time highs from here. That tells us that we're going to go a lot lower, and we're going to surpass that point, because this is a correction. And if we look at this, this is not a bull market takeoff. So I will be saying again the same thing. My target has not changed. I think we're going to 890 on gold, and I think we are getting closer.
890, you said?
Yeah, 890. Yes, around there.
Okay, you know why that number rings a bell to me?
No,
that was a high in 1980 when Russia invaded Afghanistan, and we had $50 silver. Yeah. And 880 was the high of the previous gold bull market in the 70s.
Wasn't it just below 890?
880, I remember.
880, yeah, so, something like that.
Yeah. Something right in there.
Yeah, exactly. Yes.
So it's a retrace back to the bull market of the 70s.
I could have shown you that chart, but that actually also makes sense in the bigger structural perspective.
Okay.
You're absolutely right. So
interesting number. Okay.
But this kind of structure, if we look at this again, you have to look at, with something that starts out correctional, does not all of a sudden become a bullish move. Yes, it's bullish and it's a strong move. Make no doubt about that. And from this point, going up here, this is a great rally. So no doubt about that. But that does not mean that this is the right time, for instance, which is my strategy, to buy miners, because the miners are going to go a lot lower when this is going to happen, as I see it. So let's see how this plays out. We could, did they buy us 2 years? This does not suggest that we are going to see another 2 years of rally. So my forecast on the 6 months, 0 to 6 months, is more deflation, illiquid kind of environment. We'll see if oil comes down again hard. I'm not sure we've seen the bottom of it, even at those negative levels. We still see more US dollar shortage. We have an extreme of that. We have a bounce for now, but we're going to see it play out again as I see it. USD dollar will go up. Equity sell-off as I see it. Unemployment, GDP crash, all the bad things, but of course, massive intervention. But I think we'll have to get to the more fiscal part of intervention before we will see something which is coming, which will be inflationary. And we are getting closer to the inflationary scenario, which was the secular bottom I pointed out, if you could remember the corn and the wheat charts. There are a secular bottom coming in, which means that the whole economic regime that we have right now, which is deflationary, is going to change. And that was the point I talked about when you asked me if there will be a point of where the stimulus will no longer work. That's the point. Because in a world where inflation starts to rise, but you cannot bring down unemployment, that's when you cannot do stimulus anymore. That's when you'll see inflation coming out. So, and that I think is is what we're going to see from 6 to 36 months from now on. Stagflation, some of these bad things happening, and that's also going to be a terrible equity environment. This is going to be the phase where we will see the real gold, silver, and Bitcoin bull market. And then I see for the longer time frame, which will be the contractive spring, which is where we have brought down the debt levels to record lows again, because we need to see the inflation bring them down. We need to see insolvencies or bankruptcies and debt forgiveness and what have we, before we get to that, and maybe some kind of new monetary system, which I could also be envisioning. But
what's your guess for a new world currency? SDRs?
well, yeah, could be. I haven't put much thought into that
Okay.
yet, but it could be some kind of basket. I think there probably is a reason why the central banks right now are buying gold, because they're all thinking, if we want to have a stake in that game when we get to it, it's about having as much gold, in our bank deposits in our deposits as we can. So I think it's about going to be a basket of something, but I think it's going to be US dollar friendly. It's going to be something that the US dollar is going to strengthen. But that's a long story.
Yeah.
For
Okay.
another day.
All right. Well, anything you wanted to wrap it up with?
No, not so much. I mean, I continue to see this, bad things unfold. Unfortunately, I cannot see, it's not just about one chart. And I think that has been the strength of some of the good calls I actually had. There were the things on the CRB, on the Bitcoins, and there were others.
What's your view on Bitcoin? Is it going to deflate with deflation and with the market?
Yeah, I think yes, I think it is. If you don't
Jane
want
is asking if you have a view on Bitcoin.
Yeah, let me just see. Oh, can I get to it here? I got it somewhere here. I think there we got it. So, don't put too much into this trend line here, but again, to me, it's about the structures. You got something here, you got something there, and then considering what are they? Are they primary moves up, or are they correctional? This is a correctional move.
All right, we're not seeing that chart. You might have to just
oh, okay,
stop
sorry.
your share and then reshare if it's on a different screen.
Okay. So let me just point it out in words instead.
Okay.
So I think we're going to see a strong decline from around these levels here, and then to around the 2,100 area before we're going to see extreme highs. During the run from fiat currencies, we're going to see Bitcoin be a place to seek some kind of safety. When the Fed probably gets in and trying to crash the dollar on purpose. So Bitcoin will be a place of safety at some point, but I don't think it will be here.
You have a view on COVID? Is there going to be a second wave that could add to deflationary pressure?
Actually, Dale, I think you put on the one the great chart there where we had was it the three waves that you were pointing out to during the pandemic in 1918 and 1919. I'm referring to that when I speak to people, and I think yes, of course it is going to, because it's going to put pressure on the velocity of money.
Who's going to go out between the virus and social unrest? Where do you go?
Exactly.
I've had a haircut in 4 months, buddy.
So how do you look now, Dave?
How do I look? I look like a refugee. Here you go. This is how I look. See my
okay.
So I look like Ringo Starr. I have a Ringo cap. Anyway.
Yeah.
Henrik, thanks for coming back and taking questions and owning things. This is a tough business, and you've laid out a pretty difficult time frame that we're in. But looks like if you could just get through the next 3 years, that there's hope on the other side if you manage yourself right and live in the right place, and you could be there for the beginning for spring.
Yeah,
the spring we didn't have this year.
Exactly.
In the economy in 3 years.
Exactly.
That's something to look forward to. So you get rich, and then you just buy the bottom of everything and sit on a beach.
We can hope for that.
All right, buddy. Anyway, thank you so much, Henrik, for coming. It was great talking to you. Let's not let this much time lapse. And you're my trading warrior brother. I wish you all the best, and that you're on the right side of things, whatever you touch.
Thank you, Dan. And same back to you.
All right, everyone.
Cheers.
So that's a wrap. Remember, don't just count your deflationary positions, count your blessings. And we'll be here tomorrow for the NFP. Trade it, react to the reaction with us tomorrow. Thanks again, Henrik Zeberg, and we'll see everyone tomorrow. Very welcome. You're welcome, Jugal, Darshan, Ite, Mode. See you guys tomorrow. And ladies. Adios.